Today I'm going to show you a Heikin Ashi trading strategy that is super good for Forex, crypto or stocks. It's simple to use and it has a good edge over a long period of time. So let's get started. Using the Heikin Ashi candlesticks, we will need two more indicators, which is the period of 12 moving average and 50 moving average. When I use this strategy for scalping, I typically go off the 5-minute time frame. As we can see, the market is moving towards the upside every single time. It's making new highs just over here. This was the first one. This was the second one. What's also important is the 12 moving average crossed the 50 just around here, giving us a bullish signal to buy. Now the question is, where could we have entered? So we need to draw an area of resistance just around here. This was a perfect area zone, kind of consolidation. Every single time it was touching this area zone, it dipped towards the downside and started to consolidate in between two area price levels. What's important to note that the market has been trending towards the upside each time, closing higher and higher. In my eyes, the perfect trading entry would be after we get that cross of the previous area of resistance. This was the resistance line just over here. We crossed it with this huge big candlestick. So around 30 pips stop loss in this case is ideal because we are covering the 12 and 50 moving averages, and your stop loss has to cover the moving averages, because remember, if the market decides to dip down, the moving averages will likely act as a trampoline and it's going to push the candlesticks back up. So keep that in mind. Always cover your moving averages. Trust me, it will give you an edge in the market. So once we cover it with 30 pips stop loss, we want to have a better risk reward. So in this case, we would have gotten, maybe a 2-to-1 to 3-to-1 risk reward. We could have gotten this trade for around 90 pips profit. However, there were situations where we could have potentially closed it. So maybe once the Heikin Ashi candlestick is red, you close it off. So potentially you could have banked 26 pips just around here because the Heikin Ashi is red. You never know, in stocks, crypto or Forex, it could just continue dropping down and not react to your, moving averages. So that's why maybe once you're in profit, close it off. Some profit is better than no profit. Remember that. So you could have potentially closed it off here, or if you're a little bit more daring per se, you could have closed only when it crosses the 12 moving average, which is my preferred method in this case. So we're potentially riding this wave over here. It crosses, so we don't bank 90 pips, but we bank just about 73 pips, which gives us 2.43 risk reward ratio, and this would have been a great trade. Now let's take a look at another example, and since this is Forex, we can actually profit both ways, whether we are buying or selling. So this looks like a great trading opportunity as well. I would have taken this trade 100% of the time. Beautiful push exhaustion, right? One touch over here, two touches. What does it confirm? A double top pattern. The neckline was just over here. This is a price action pattern. We broke the neckline with these candlesticks over here. That's when the two moving averages also crossed. This is a great indication for short selling opportunities. So if we open up a short position just over here, we want to move our stop loss just a little bit lower. We are still covering nicely, even with 15 pips. There we go. This is a nice risk reward, 3-to-1, something like that. That is beautiful. Since all the Heikin Ashi candlesticks are red, there's nothing stopping you to actually continue holding the trade. As long as the 5-minute candlestick closes red, you keep it open. And if we did that, as we can see, we could have potentially profited a lot more, about 87 pips profit, and we can see the green candlestick over here. So we could have potentially closed it just around here, which is still pretty damn good. Risk to reward becomes 4.73. That's an amazing trade. Or you could have been even greedier and wait for that 12 moving average cross, which is around 60 pips. Still very good. Now the example I gave is, of course, we entered a little early. Probably the two moving averages wouldn't have been split 2 to 3 centimeters apart. You probably would have seen the split just around here, but since we traded this kind of chart pattern and M formation breakout, you could have done an early entry, but if you wanted to, you could have entered just around here. Just make sure that you are covering the two moving averages, and it would have still been a great trading opportunity, a maximum of 3-to-1 risk reward, or by the minimum 2-to-1 risk reward, which is still amazing. Now, profitable traders will always use multiple time frames, 100% guaranteed. So if you're only looking at the 5-minute time frame, your results won't be as great as mine. So on the 5-minute time frame, we see something like this, a previous area zone just around here, and we can see a clear consolidation, right? The trend is up and it's consolidating, and we want to wait for that breakout. We potentially enter in our trade for a nice long position. We want to cover our 2 moving averages, so the stop loss would have been 46 pips in this case. That's quite big for USD Japanese yen, but let's say we would do 2-to-1 to 3-to-1 risk reward. So let's say 2-to-1 in this case, because our stop loss is quite thick. Now we could have closed our trade once we saw the Heikin Ashi candlestick, so maybe this trade would have been not the greatest risk reward, but we banked ourselves 16 pips. Or you could have closed the trade once across the moving average, just around here, so around 15 to 16 pips as well. Now you could be closing these trades, or you could be looking at the overall trending bias. Now if we simply have a look at the 15-minute time frame, we can see that the trend is definitely strong, right? A recent moving average crossover, 2 to 3 centimeters kind of trend in between the 2 moving averages. Area zone over here, we are buying, right? We could have potentially closed on the 15-minute time frame, maybe around here, which would have been about 20 pips in this case. Or you wait for that cross of the 12 moving average on the 15-minute time frame. Since the higher time frame direction is towards the upside, the overall market direction is very, very bullish currently for USD Japanese yen, pretty much ignoring the 5-minute and following the higher time frame bias. So maybe you could have kept this trade open for a nice 55 pips, and once it reaches around 50 pips profit in this case, you could have moved your stop loss to entry. So this could have been a 5-minute scalp trade that turns into a nice day trade and potential even swing trading opportunity per se. So try this strategy out, it definitely works, and I recommend watching this video next because I talk about chart patterns which you will need to profit with this strategy as well. So learn them both and enjoy.